Welcome back to part 3 of my options trading income strategy and how I'm doing. Now, before we cover this, I just wanted to quickly cover an update that I've done to my portfolio, and that is that I've heavily trimmed uranium. So here are my reasons for why I've heavily trimmed uranium. Firstly, it seems positive news does not equal higher prices for stocks. Now, there's been so much countless positive news for uranium that it just does not stop. And I feel any other sector would have just skyrocketed by now. So I'm pretty disappointed that it seems uranium is heavily linked to the general markets and basically what the Fed is doing. If the Fed hikes, uranium dumps. If the Fed eases off, uranium starts to pump a little bit. But at the same time, it's also not pumping as much as other sectors. Luckily, I was in kind of early enough where I've been able to sell my initial capital that I invested, but only left the profit in there and also rotated some stocks into basically kind of like YOLOs or lottery tickets if the uranium price does do something crazy. Here at the bottom is rig, and this is energy fuels, just random ones I've taken. The offshore sector seems to be more driven by the actual rigs being used up, utilization, day rates picking up, etc. Those really seem to have a defining effect on the stock price, regardless of what the general equity markets are kind of doing. It still keeps trending, moving up. Where uranium really just doesn't know what it wants to do, and it's not really its own thing at the moment. It's just following the general market. So that's an update. I've scaled back heavily. May regret it, may not. But I think I'll do perfectly fine in the offshore sector. Okay, so this is part 3 of my options trading income, which has been going very well. There were some very volatile moments, some hairy places, but that's everything that we're looking for in this kind of strategy. You're really trying to capture on that volatility. So we are up $1,209 US. I started in this, like, let's just take the 17th of February, probably a week before this. It's been about a month. I'm pretty happy with those gains. I'm actually really happy with those gains from initial capital of 7,200. Firstly, I absolutely fucked this up. I ended up buying rather than selling. So I was buying this, and once I realized, I just closed it out for a loss. I think it was around 80 or something. So as soon as I realized that, I just sold this for a small loss. I think I lost around $80. Kind of absolutely screwed that, but okay, never mind. So the next trade that we did was on Petrobras, and it was at the 1050 strike price, and this was on the 3rd. We did not get assigned it. We picked up the premium, very nice for that week. After that, we went with Riot and Marathon Digital Holdings. Now, I was holding these stocks when the market was absolutely chaotic. I got assigned both of these, and I was down quite a bit on both of these stocks. Like I was down maybe in total like $300 or $400. The markets have been absolutely amazing for us Bitcoin miners today, as you can see in the stock. They're really just like for example Riot, right? In the last week, it's gone from like 30% up. So I got assigned them, and that was kind of good that I got assigned them, because I was able to now finally do some covered calls. So, and yeah, I'm selling covered calls on my right positions. And the amazing thing about this is for example, I got assigned 400 at $6, and I'm selling at 7. So I picked up the premium, which was pretty nice, 128 premium, and I will pick up the capital gains of 400 if this gets assigned. So in total, I'm going to pick up basically 400 plus 128, so $528 US if this goes through. And the same for Marathon Holdings. So that's a really bonus thing about covered calls, is that you get the capital gains on top of it, which is this. So I'm really liking this strategy, and it's working out well.